Hi, good afternoon, folks. This is Kim Camarda. And as Jeff mentioned, I'm going to take just a few minutes today to give you a technical perspective on the markets. I've got a chart of the S&P pulled up here with some notations on it just to sort of guide my overview. We closed today, let's see, right here. See if my mouse will catch up with me. There we go. So I've got my mouse going now. We're still right here in this 338 area. The bulls are trying desperately, of course, to break through this resistance that we saw in February before the big drop, which I think sits at 339. So not a lot. There wasn't a lot of price action last week, a lot of movement. We're still just kind of sitting here in the same area. We're in what they would call an overbought scenario. So price is really extended. It's really overbought in a lot of sectors as well. And what I have here on the chart is, as I explain this overbought scenario to you, this orange line represents the movement, the price of the S&P. So that's where we're at. A couple of the indicators I have on here, when it turns gray up here, this does indicate overbought as well. And the purple here on the bottom is a Bollinger Band, which tries to approximate about 87 to 90% of the expected movement of the market. And one of the things that it will do is, and I'm going to just draw your attention to these areas where it rides this upper band here. That's where you get into these overbought extreme scenarios. And you'll see it coincides with the gray area highlighted here at the top of the chart. Now what happens, the stock prices in the market, much like life, when things go or get pushed to extremes, they tend to want to revert back to some average behavior, average price, average action, and that's notated here on the chart. That center line here that I'm highlighting, that's sort of the middle of the road where the stock prices are average, or the average here is traveling. And it'll push out to these extremes, and then what happens? It wants to pull back. A couple likely places that it pulls back to, again, is that center line reverting to some kind of average, or it can pull all the way back to the bottom line. And normally when you'll see stocks start to ride that bottom part of the channel, that's when they get oversold. So it's just the opposite of the scenario we're seeing. So this was back in 18 when we had this good run, very overbought, and it did pull back all the way to that lower band. This green line is a 50-day moving average, and a lot of times the moving averages act like gravity. So when the price starts to really pull away, it acts like gravity and wants to pull the price back. All sort of the natural ebb and flow of the market. Just think of it too like a balloon. It gets too inflated and got to let a little air out. So natural stuff. Here we were again, late 18 going into 19, pulled up, rode that band. You can see it indicated with the gray up there, and then again, pulled back to the lower area, right to that 50-day moving average. Same extreme was occurring going into February. Riding it, extreme prices, really pulling away, and then some event, some news causes it to pull back. And that's sort of where we're sitting right now, pushing even further, actually up into this orange area. But so, okay, we're overbought. What does that mean? Where are we going? So we can use technical analysis to give us some idea. Of course, it's not a perfect predictor. And a lot of times it'll give you an idea, sort of a roadmap of possibilities. And then you just have to evaluate the market. That if that starts to happen, then you evaluate where you are at that standpoint and how things are developing. What we could see, a likely pullback of probably, this would be in the neighborhood of 5% to the 3,200 area, which was good support and acted as resistance in the past. Another likely area, if it follows that same scenario where it rides the band and then pulls back, the lower band also happens to coincide with that 50-day moving average, again, that green line. So, it could be anywhere, some 5% pullback or something more along the lines of 9.5 or 10% back down to that lower area. So that's really where the market's sitting today. It doesn't mean that tomorrow we're going to wake up and this overbought situation resolves itself in a day. Sometimes it's gradual, sometimes it's a few drops, and it could take place over weeks, much like it can ride in those overbought extremes for a few weeks. It could take a little while to resolve itself. But again, just part of the natural ebb and flow of the market. We're keeping our eye on some of our positions and seeing where we can take profits or add some hedges to protect some of the gains we have. And then, if the market does pull back, we will certainly evaluate it at that time and look for whatever other opportunities or positions we can position ourselves in. So that was just a quick take on where we're at. I hope that you found that informative and useful. Of course, send any comments to Jeff or myself. My email is just my name, kim.camarda@camarda.com. Look forward to adding some more technical commentary for you in the future. And of course, let me know what you thought about it or what we can do to make it more informative for you. Thanks so much. Have a great night.